Hey guys, all right, it's that time of year. It's time to talk about like the most adult thing that you can ever talk about, which is taxes. I really wanted to make like a full kind of video going through what taxes are, how they're taken off, talking about some of the things you can and can't deduct and that kind of thing, but that would turn into a super long video. I'm trying to pump out some quicker ones and cover ETFs still. So I decided to just concentrate on some tax tips specific to 2020 because, there was a lot of new stuff coming in with COVID. So it makes this tax year a little bit unique. So we're just going to focus on that for now. I'm going to talk a little bit about how to claim, work from home expenses. I'm going to talk about some of the new boxes on your T4, talking even about whether you should be filing taxes if you were claiming EI or CERB or CRB this year. Bookmarks, as always, in the description, and let's just jump to it. Okay, the first thing I want to talk about is if unfortunately you lost your job due to COVID, you probably were part of the Canada Emergency Response Benefit, or CERB, which ran until September 26th. After that, it was replaced by the CRB. If you used either of those two programs, or if you didn't and maybe you had applied for EI, it's important to know, here's the first tip. You shouldn't have EI and then have applied for the emergency response benefit. You either have one or the other. If you have done this, there's a phone number you can call. By the way, I'm going to link the page I'm using for all this information in the description that you can go and read for yourself. But the CERB was kind of the first initial response to those who had lost their jobs due to COVID. The CRB came on September 26th, and that kind of was the same idea, same eligibility requirements, but the CRA deducts 10% of the tax at the source. Now, it's important to note that if you get EI, you will receive what's called a T4E in the mail. In fact, my wife, who's on maternity leave, got a T4E as well. So you do get taxed on this employment insurance and those benefits. So you may think that's counterintuitive because why would I pay taxes if I need the money because I'm not working? But yes, it is income, and you will have to file your taxes because you are receiving it. So if you receive EI, you should not be applying for the response benefit, the CERB or the CRB. You should only have one or the other. Other thing to keep in mind is taxes are due on April 30th. The other thing that you might notice that's different this year, here's the next tip, is that you will find on your T4, which I've got right here, there will be some extra boxes that weren't there last year. Now, because a lot of companies and businesses received something called CEWS, which is basically the emergency response for businesses, companies also received money from the government for each employee they were employing at the time during COVID. It was basically government assistance. So as such, they have kind of passed the tax information on to you on your T4. So there's going to be a few extra boxes. If you have your T4 in front of you, you may not know where some of these numbers come from. So this is more just for your information. But the number in box 57 is just your employment income from March 15th to May 9th. In 58 is your income from the May 10th to July 4th. In 59 is your income from the July 5th to August 29th, and then in box 60 is August 30th to September 26th. So that's all those are, in case you're wondering what that's about if you see that on your T4. Now, the next one is probably the most interesting to all of us, and that's, can you claim some of your home expenses on your taxes because you're working from home more this year? Before I jump into this, I gotta kind of explain that this is a tax deduction, which is different than a tax credit. And I gotta bust another myth here. So a lot of times you'll hear people say that they don't wanna make more money because they'll be in a higher tax bracket and get taxed more. Well, the US and Canada both have what's called a progressive tax system. So yes, there are different brackets. If you start to make more money and you start to get into that next bracket, only the amount of money above the threshold of the last bracket is what's taxed. So let's make this easy. Let's say there was a tax bracket at $40,000 and 1 year you start to make $45,000 and into that next bracket. Well, you still get the same tax rate for the first $40,000, but your tax rate will only increase for that last $5,000. So hopefully that makes sense. Now I gotta explain a little bit about what a tax deduction is versus a tax credit. A tax deduction is essentially taken off the income that you are filing as in your taxes. It takes it off the income ahead of applying those percentages to what you've made that year. So let's say you want to claim $5,000 and you've made $50,000 that year. So what a tax deduction will do will actually take that money off before the tax is applied, and it'll actually make it seem like you've only made $45,000 this year, and you will be taxed accordingly. What a tax credit is, well, it's actually applied on the back end. So you would you do your calculations based on all the income that you've made that year. You take the credit right off the number of the tax you owe rather than the income that you've made that year. So I always like a tax credit because it's more straightforward, but what these are tax deductions. So back to claiming the taxes for your working from home expenses. Well, there's a decision you have to make. There's two methods you can use. So the CRA has outlined the first one being the keeping it simple, just a flat rate, $2 a day for every day that you worked from home, up to $400 per person who like in your household. So if you've got two people who are taxpayers, this could be $400 per person. And what that should cover is probably, your internet, the extra electricity you probably use, the water for, whatever, going to the washroom, making your lunches and getting your drinks at home, right? And what's nice about this is you don't really have to keep too much of a record, and it probably applies to most of us that have, work from home. But let's say that you have encountered more of a change due to COVID and working from home than the average person. Let's say you had to buy a whole setup like monitors, a new computer, all this kind of stuff on top of using more of your utilities and everything too. Well, that's when you go for option 2, which is just called the detailed method. Now, to qualify for the simple method, you must reach 2 criteria, which is working from home for more than 50% of the time for a period of at least 4 consecutive weeks in 2020. And so that means like maybe you were in and out of the office or whatever, but at least 50% of the time working from home. And then you're claiming only home office expenses and not claiming any other employment type expenses such as like your vehicle or meals and entertainment. Those are kind of more things you would claim if you were a contractor, okay? So these are for like kind of regular employees, for corporations, companies, whatever, that probably didn't have those types of expenses prior. And so this is what myself and my wife would qualify for. We definitely are option 1. Now option 2 is called the detailed method. In this one, let's say you've incurred costs like you've had to buy a whole new computer setup at home or new monitors or what have you. Well, you can claim all those as expenses. You'd have to keep all of your receipts. You want to track what you think you use from every utility and every bill and every month, and you want to document all of these things. You will also need to request a form called a T2200 from your employer who will confirm that you in fact were employed and were working during this time. So if you think you've incurred more than $400 in expenses, you'll need to submit that T2200 form to your employer, get it back, and then document everything like the way that you substantiate what you're claiming on your taxes, and keep those on file in case there is an audit or something in the future. So like I said, I'm probably not doing the detailed method. I haven't incurred much in the sense of buying any new equipment, but I have probably been using my utilities and things like that a little bit more than I typically would have. It's also a lot simpler, so that's why I like that option. And so what's gonna happen is I did my calculation, I'm about $390 is what I can probably claim on my taxes, but because it's a tax deduction, however, it's taken off before the tax rate is applied, so it really saved me only like $140, $150 after it was all said and done, but still better than nothing. Well, like I said, guys, I'll leave all this information in links in the description. I hope it helps you in kind of navigating your taxes this year. It's a little bit of a unique year. So I don't want to make this any longer and more boring. It is a super adult topic, and holy crap, we'll see if I can make other tax videos more fun, but I'm going to sign off for now. So until next time, have a great week again, guys. Spread the wealth. We'll see you in the next one. Bye.